Hey there, tech enthusiasts. Welcome to the Friday edition of Tech Stocks Daily, where we bring you the hottest updates from the NASDAQ. Get ready for a roller coaster of tech fun. Google's AI mishaps that had us questioning search results, Apple's spooky photo bug fix and exciting AI leaps, Intuit's mind-blowing Q3 earnings, and NVIDIA skyrocketing past $120 per share, making it the third most valued company globally. Plus, we'll touch on NVIDIA's strategic moves in China and what that means for the future. Stay tuned, it's a wild ride ahead. Let's dive right into today's big topic, Google. Buckle up because it's been quite the roller coaster for the tech giant, with its latest AI features making headlines for all the wrong reasons. First up, AI Overview. Google's shiny new feature for summarizing search results has been under the spotlight, and not in a good way. The tool has been dishing out wildly inaccurate and sometimes downright dangerous information. Social media users have been quick to share their dubious AI-generated findings. Picture this. You ask Google how to keep the cheese from falling off your pizza, and it suggests adding non-toxic glue. Or how about it stating that former President Barack Obama is a Muslim? Yikes. There were also laughable responses like advising people to eat a rock a day based on geologists' recommendations. Or offering health tips like staring at the sun for 5 to 15 minutes for best health. These bizarre outputs aren't just memes, they're becoming a real headache for Google. In response, Google has had to pull some of these erroneous overviews, claiming they were based on generally very uncommon queries, and even suggesting some shared screenshots might be doctored. Nevertheless, it's clear that these AI-generated errors aren't inspiring much confidence in the company's latest push to integrate AI into everyday search functions. Speaking of AI, Google's other big project, Gemini, hasn't fared much better. Gemini, their image generation AI, faced backlash earlier this year for producing historically inaccurate and racially insensitive images, like depicting diverse Nazi soldiers. Google had to issue a public apology and pause certain features of Gemini. These issues all harken back to broader criticism of Google's AI initiatives, with experts pointing out that the problem isn't AI being too smart. Rather, it's AI being too dumb and still getting trusted to do important tasks. The risk, an avalanche of misinformation could easily spread if people rely too heavily on these AI-generated answers without proper scrutiny. Despite these hiccups, Google's long-term investment in AI has clearly paid off in terms of stock market performance. The company's stock has soared, seeing a 96% rise in 2023 alone, recovering from a previous 44% slump. Their early bets on AI in products like Google Docs, Gmail, and advertising tools like Performance Max have kept them ahead in the AI arms race. The stock recently broke through the $151 mark, signaling potential for continued upward momentum. And if Google's day wasn't busy enough with AI controversies, they're also making waves in the e-commerce world. The company announced a minority stake investment in Flipkart, part of a broader funding round led by Walmart. This partnership could help Flipkart expand its reach and digital infrastructure in India. All in all, while Google's strides in AI are impressive and show great promise, the devil, as they say, is in the details. The tech giant clearly needs to iron out the kinks in their AI products to prevent these public snafus from overshadowing their innovations. So, let's keep our eyes peeled for what Google does next to clean up this mess. Buckle up, because we've got a juicy Apple-filled news medium well done for you today. First off, Apple has been on the hot seat due to a peculiar bug affecting iPhones running iOS 17.5. So picture this. You delete a photo, say goodbye to that embarrassing selfie, but it decides to resurrect like it's auditioning for a zombie movie. Yep, deleted photos were magically reappearing. Apple laid this one on a rare case of database corruption, not iCloud photos, as some Sherlock iPhone users speculated. Moreover, Apple claims this was largely occurring during a device restore or transfer process. They've since released iOS 17.5.1 to exorcise these ghostly photos for good. And no, your sold iPads aren't haunted. Apple assures a complete erase really does mean your files are kaput. But Apple's news train doesn't stop here. We're about to venture into the nifty world of finance and future tech. Dan Ives from Wedbush just gave a bullish signal for Apple's stock, raising its price target from $250 to $275. Why, you ask? Because he foresees a rampage of demand with the rumored AI-driven iPhone 16 supercycle. Ives is calling WWDC the key moment ahead for Apple. Apparently, AI within the Apple ecosystem could be worth an extra $30 to $40 per share. Alongside this, he even hinted at Apple's rebirth in the Chinese market. Will patience and AI help Apple ride the sturdy stallion to new heights? Time will tell. And speaking of AI, there's some fresh competition brewing in the cauldron. Microsoft announced new AI-ready PCs under its Copilot Plus branding, boasting major collaboration with top-notch manufacturers like Dell and HP. They're going toe-to-toe with Apple, even claiming their Copilot Plus PCs are 58% faster than Apple's sleek M3 MacBook Air. Will Apple retaliate in the AI hardware game? They might. Reports suggest an Apple executive was snagging TSMC's 2nm chip capacity for next-gen AI chips. It's a real tech showdown. Microsoft's rapid AI advances versus Apple's secretive powerhouse maneuvers. Finally, a twist from the Oracle himself, Warren Buffett. Despite once dubbing Apple the best business in the world, Buffett recently sold 116 million shares of Apple stock. Was this a sign of waning faith? Not quite. Buffett hinted his move was tactical, anticipating higher future taxes on capital gains. Even with this hefty sale, Apple remains the crown jewel of his portfolio, making up a staggering 41%. So there you have it. Apple dealing with phantom photo bugs, gearing up for an AI supercycle, countering Microsoft's big AI play, and getting a slight trim from Warren Buffett's giant stock garden. Stay tuned and keep those notifications on. The Cupertino giant always has more surprises up its sleeve. Today's tech buzz is all about Intuit, the financial software giant that just dropped some exciting news that has everyone talking. Intuit reported its fiscal third quarter earnings, and the numbers are seriously impressive. So let's dive into the deets. Intuit's non-GAAP earnings per share for Q3 2024 came in at a whopping $9.88, which comfortably beat the Zacks consensus estimate by 5.78%. This is an 11% jump from the same quarter last year. Revenue? Oh, it surged too, up 12% year over year to $6.73 billion, also topping consensus expectations. Yep, Intuit is absolutely flexing here. A major chunk of this revenue came from Intuit's small business and self-employed group, which contributes 35.4% to the total pot. This segment grew its revenue by 18% year over year, hitting $2.38 billion. Within this, the online ecosystem revenues were the stars, climbing 19% to $1.8 billion. QuickBooks Online accounting alone saw a 19% rise to $860 million, thanks to a growth in customer numbers, higher prices, and a shift towards Intuit's full-service offerings. Not only did QuickBooks get a shout-out, but the online services like payroll, payments, and even time tracking also brought in the big bucks. These services saw revenues soar by 20% year over year, largely due to strong performances from MailChimp and QuickBooks Online Payroll, among others. The consumer group didn't slack off either, with revenues jumping 9.3% to $3.65 billion. And let's not forget about Credit Karma, which contributed an additional $443 million, an 8% surge, driven by more business in areas like credit cards and auto insurance. Now let's talk cash and dividends. As of April 30th, 2024, Intuit's cash and investments totaled $4.7 billion, up from $1.48 billion in January. Sure, they have a long-term debt of nearly $6 billion, but they also repurchased $584 million worth of shares. Plus, they've upped their quarterly dividend by 15% to 90 cents per share, set to be paid out in July. Despite the great news, it wasn't all rainbows and sunshine. The stock was trading lower by 5.33% in pre-market activity, likely due to conservative guidance for the next quarter. For Q4 2024, Intuit expects revenues to grow by 13 to 14% and EPS to come in between 80 and 1.85 cents, lower than some analysts had anticipated. However, the long-term outlook remains strong, bolstered by strategic investments in AI and specialized services. The company's CEO, Sasan Goodarzi, highlighted the transformative impact of AI, noting that it allows Intuit to deliver more value to customers while managing costs effectively. So there you have it. Intuit is definitely a hot topic today with some stellar financial results, strategic advancements, and a promising future in AI. It's certainly a stock to keep an eye on if you're in the tech and finance game. All right, NVIDIA is making waves across multiple fronts on the NASDAQ. Let's dive into why NVIDIA was the absolute star of the stock market show today. First up, NVIDIA stock shot up nearly 8% in Thursday trades, soaring past $120 per share. This surge came after a blockbuster earnings report, and market expert Jim Roppel thinks this could just be the beginning of a monster run. Roppel is convinced that NVIDIA's knack for jumping from one tech trend to another, from video games to automotive applications to now generative AI, makes it the most innovative company in the world. He points out that generative AI could be NVIDIA's biggest driver yet, comparing it to Cisco's massive rise during the internet boom. According to Roppel, NVIDIA's recent success has also lifted the semiconductor sector as a whole, making this a momentous time for tech investors. But wait, there's more. Even Elon Musk couldn't help but be wowed by NVIDIA's market cap, which thanks to Thursday's gains skyrocketed to an astounding $2.55 trillion. To put that in perspective, that's more than the entire German stock market. And get this, NVIDIA is now the third most valued company globally, trailing only behind Microsoft and Apple. Talk about a mic drop moment. Stanford professor Eric Brynjolfsson and Vailshare Capital Management founder Jeff Ross joined the conversation, underlining how NVIDIA's leap says as much about its ascendancy as it does about Germany's economic woes. With the German economy stumbling, NVIDIA's rise seems even more pronounced. NVIDIA isn't resting on its laurels, though. Amid the high fives and market buzz, the company is also preparing for the worst. How so, you ask? By cutting the prices of its flagship AI chips in China due to intensifying competition from Huawei. Their H20 chip, which was designed specifically for the Chinese market, is now being sold at a discount compared to Huawei's Ascend 910B chip. This price cut is NVIDIA's bold move to maintain its stance in China's ultra-competitive market, especially as US sanctions and domestic pressures loom large. Analyst Hebe Chen calls it a balancing act for NVIDIA, as the company tries to maintain its Chinese market presence while navigating delicate US-China tensions. With 17% of its fiscal 2024 revenue coming from China, NVIDIA has introduced tailored chips to comply with US export restrictions. Despite these challenges, NVIDIA's determination underscores its resilience and vision for future growth. So what do you think, Tech Fam? Is NVIDIA's adaptability and market strategy enough to keep them ahead in the game? Or could the rising competition and geopolitical tensions pose a serious threat? Let us know your thoughts in the comments below. Are you bullish on NVIDIA, or do you think the golden goose needs a breather? We can't wait to hear from you. Time to put on our investor hats. Let's break down one of today's hot stocks, NVIDIA. Given the roller coaster of news buzzing around NVIDIA, from their jaw-dropping earnings report to the staggering market valuation, it's hard not to feel a twinge of FOMO. With their stock surging nearly 8%, hitting over $1,020 per share, and becoming the third most valued company globally, there's a lot to unpack. Here are 3 reasons why I'd consider holding on to NVIDIA stock, and 1 reason to be cautious. Hold reason number 1, generative AI boom. NVIDIA's knack for pivoting into booming tech trends is unmatched. Jim Rappel highlighted that generative AI could be their biggest driver yet, likening NVIDIA to Cisco during the internet boom. This adaptability makes them a powerhouse for future growth, especially as AI continues to revolutionize industries. Hold reason number 2, market leadership and innovation. NVIDIA isn't just riding the wave, they're creating it. They're continually at the forefront of innovation, especially in AI and semiconductors, keeping them ahead of competitors. The fact that their recent success has lifted the entire semiconductor sector speaks volumes about their leadership. Hold reason number 3, strategic market moves. Even with geopolitical tensions looming large, NVIDIA is proactively navigating these waters by cutting prices of AI chips in China to combat competition from Huawei. This bold move shows their commitment to maintaining a strong market presence, even in challenging conditions. Plus, they're tailoring products to comply with US export restrictions, showcasing a smart, strategic approach. Cautious flag, geopolitical risks and competition. However, it's crucial to acknowledge the ticking time bomb of geopolitical risks. US-China tensions and increased competition from local players like Huawei could pose significant threats. This balancing act, as analyst Heibi Chen puts it, is worth monitoring closely. NVIDIA's adaptability is commendable, but these external factors are unpredictable and could impact their trajectory. So what's my call? Given these considerations, I'd recommend holding NVIDIA. Their innovative edge and strategic foresight make them a strong contender for long-term growth, even amid competitive and geopolitical pressures. But keep an eye on how these risks evolve. Remember, folks, always do your own research and consider your financial goals and risk tolerance before making any investment decisions. What looks like a golden goose today could need a breather tomorrow. Stay informed and happy investing. What a whirlwind day on the NASDAQ. Google faced flack for its AI hiccups but still soared in stock value. Apple dealt with ghostly photo glitches while gearing up for an AI-powered future. Intuit flexed stellar Q3 results, and NVIDIA's monstrous earnings and market cap leap had everyone talking. Each of these giants showed resilience and innovation, despite facing their own unique challenges. If you enjoyed today's rundown, make sure to like, subscribe, and share this video with your friends. Come back on Monday for another dose of the latest in tech news. Have a fantastic weekend, everyone.